welcome to today's live. My name is Lunta Di La Paulo. I'm the managing director of Yeto Accounting and Tax PLLC. We are a CPA firm servicing small businesses across the US, and we typically help business owners who are seeking help with exactly three key things. Number one, we help business owners who are struggling to understand their profitability, to have a cleaner view or clarity in terms of where their income is coming from or where they're losing money, understand their cash flow, their profitability, and improve these results. The second thing we help business owners with is typically with their tax mitigation or minimization strategy. We help business owners across the board, making sure that they're not paying more than they should have been paying to the IRS or to their local or state government. And the last thing we help business owners with is typically with their exit plan. We want to help business owners who want to design a business that when it comes time for them either to transfer it to somebody else or sell it, right, they will actually have an asset worth something. Okay, so these are the three things that we typically help business owners with. And today, I want to be connecting with you to discuss a very important profit within the umbrella of what we often help business owners with, and that is really understanding what profitability reporting and profitability analysis looks like from the perspective of a small business owner. Very often we see business owners who only understand their profit from the perspective of what how much money they have on their bank account, or in some cases at the bottom line. They really don't know what products or what services, what units or division or locations are generating for them the most amount of money, and where are they actually bleeding cash or losing money on. All right, so the goal of this live is really to help you see what does that look like in the real world, what ratio matters, how should we understand different ratios in the context of profitability analysis, and then I'm gonna go also to discuss what unit or segment reporting could look like using the example of an education business. Although what we're going to be sharing here is transferable, can be used across the board and across different type of businesses. So let me share my screen here with us so that we can begin our conversation. We're going to be looking first at profitability and cash flow analysis. Typically, right, we see a profit and loss statement, right? So a typical profit and loss statement would include how you generate money, your revenues, your operating expenses, and then your EBITDA or profit, right? So that's your typical, that's your typical profit and loss statement, and that's very common. But here's what we see a lot of business owners really missing out on, right? We see a lot of business owners who work with accountant, with bookkeeper, with CPAs, right? This is all they get, right? One fiscal year, and they don't get anything else. But that really has a lot of limitations. They also get, a balance sheet, a clean set of balance sheet, and that's it. But what we really like to see, right, is a little bit more data. We like to also do we like to see, right, besides your balance, your P&L, right, your revenue, your expenses, your income or loss. We also like to see estimates and projection. What does the business expects to make in the incoming years, and what actually will take for the business to get there? What are the assumptions underlying those projections, those estimates, and these figures in general, right? Because we want to make sure that, hey, whatever we're doing today that is working, we're going to continue replicating that, adapting to the market, and understanding what it takes to actually get the business to the next level. If we are $500,000 business today, what's going to take us to get to $1 million, to 1.5 to $2 million in 2, 3, 5 years down the road? All right. So number one, we like to see some estimates, some projections, right? Really fully backed by data, right? We're comparing those with the past to make sure that the owner has a clear picture around where the business is going. The third thing that we like to see is ratio analysis, right? Ratio analysis really helps us understand what is the business doing, right, compared to the industry. What are the metrics that we're keeping, and what is that looking like for the business, right? So we like to take a look on the current ratio, right? Depending on your business, certain ratio might be more important than others. But in general, right, current ratio, quick ratio, acid ratio really tells us the story around how quickly you can convert your current assets, right, your short-term assets into cash to cover your near-term or short-term liabilities, right? What's the business capability? Is business liquid enough, right, to cover its obligation in the short term, right? So we like to see that certain businesses, we want to see the sales receivable ratio, days receivable ratios. We want to see payable ratios or payable turnover to make sure we are really taking the temperature on the level of liquidity of this business, to make sure that, right, the business is not tying up too much of its cash on the hands of clients, or the business is not late into paying certain accounts that are critical from the perspective of the services or goods that it buys to continue operational. All right. So when we look into liquidity ratios, another important ratio is really working capital. We like to see working capital, that can cover at least 2 to 3 months to give the business a little bit of buffer. But also, depending on the industry, we might need more or we might need less time, especially when you have a longer sales cycle. So we want to make sure that that's in place. The other critical ratio that we like to see is interest coverage ratio, and this is really to the conversation around, if you have debt, if you have liability, how much of your profitability can really cover the interest payments due. Okay, we like to expand this ratio to really cover also not only the interest payment but also the principal portion, if how much your business has the capacity to do cover some of these. Utilization ratio, right, fixed asset divided by your net worth, right? We like to see this kind of metrics, this kind of ratio, to see how well are you running your business. Some of the operating ratio that I want to point out here would be the return on asset, right? What return we're getting in deploying the assets we have operating in the business. Often manufacturing businesses, right, will have large fixed assets, and we want to make sure, if we're deploying a lot of fixed asset, we really want to make sure that we're getting good and decent results, returns on these assets, especially compared with other peers in our industry. Okay. Um, I also want to point out, some of the important ratio around profitability, right? Profitability ratio are really critical, right? Return on equity ratio, that's really key, that's very important. Outside of these, we also like to really run most of our clients through a quick checklist, just to make sure that we get the right temperature, right? We want to understand the business structure, we want to understand the revenue portion. Let me just ask you a few of these questions when we run our analysis outside of the report profitability reporting, right? So for example, in terms of your business structure, do you have all of your corporate documented in a way that can be easily retrievable or accessible, right? If you answer no or yes, there is a punctuation here, right? Do you know the type of legal entity your business operates under, right? Some people say will answer yes or not sure, but when they answer yes, when we ask them what's your legal entity, they tell us an S corporation. S corporation is not an entity type. It's a tax election that you make, right, to benefit from tax incentive that are applicable to S corporation, right? But the legal structures are entirely different story. A lot of business owners actually do not understand that. So it's very important that the business owner understand, because there are tax implication, financial reporting implication, depending on the type of business or legal entity that you're running, among other things, right? Another question that we like to see, right, inside the financials, right? Let me just give you an example. Do you know how your business generate revenue? You'll be shocked on the number of business owners that we talk to, right, that have no idea how their business actually generate revenue, how they bring income, how they bring, you know, clients to their business. They have no clue. And similarly important, many business actually have no idea what are the most important client they have in the company. By the way, we've had a webinar similar to this one where we cover an analysis of revenue concentration, revenue analysis. So if you haven't seen it, just check in on our social media pages. More likely you'll find it there. If you don't find it, just shoot me a message, a DM, or an email, right, and I'll send you the link to that. So we like to do something like that, and at the end we're comparing your business to an average, you know, we're comparing your business based on a formula to the industry, to your peers. So this should give us really a good idea, right? At the end of everything, we have some charts that gives us a little bit of clarity in terms of your revenue, your expenses, your profitability, and so forth, right? We're monitoring your working capital, your current ratio, right? We're making sure we understand your liabilities exposure, and so forth, right? We have built these to give us a really nice view, nice perspective, and understanding of a lot of our clients' business. But as I said, another important element that we often see, or excuse me, we rather don't see, right, is unit or segment reporting, right? Or even customer reporting, profitability by customer, or profitability by segment, profitability by unit, right? So typically, this is what you see, right? A revenue. Okay, let me actually stop sharing this screen and share other screen, where I want to walk us through another example, right? So the as I was saying, the other important element that we often do not see that is critical down of profitability by customer, by segment, by unit, by division, by location, by however way you organize your business. Because if you don't have the right data, if you don't have the right information, you cannot make important decisions about your business. And if you cannot make important decisions based on data, you don't have clarity. The only thing you do is to guesstimate, is to, you know, to pretend you know things, and we know that that's not the best way to run effectively your business. So many business owners have a P&L, something like this, right? This is the typical P&L: revenue less cost of goods sold. You get your gross profit, right, or contribution margin, less operating expenses. You get pre-tax income, less taxes, and then you get your after-tax income, right? So but what we really see missing here is here, right, this level of information. This is what we don't see often, right? And it's critically important. It's one of these elements that is missing big time among businesses, right? So let's look into this example. Instead of us just pretending that we know the profitability of the company or the contribution margin to be 84.7%, when we actually begin tracking our profitability by our offering, we're seeing that the music program is contributing more than the dance or the theater program, for instance, because we have designed a process, a system that allows us to keep track of profitability, right? Revenue, expenses, direct expenses, and allocate other indirect expenses by each program that we offer in the school. This is an example of a client, right? And at the end of all of these, right, we have other expenses that are not allocated to one specific course or program. This is the level of profitability we actually need to come down to. We need to be able to look into our accounting financial reporting system and ask ourselves a question: is my accounting system providing to me the type of information that I need to make important decisions? Is my financial reporting system? We talk with a lot of business owners who run their business. They have internal bookkeepers, they have outsourced bookkeepers, and all they do for them is to hand over to them a financial report, and that's where everything hands for them. How we like to see things is actually slightly different. We like to meet with our clients on a monthly, quarterly basis, depending on how often they're available and they want to meet, right? Where we review the financial, we analyze the financials, we do a deep dive into the financial, right? To understand the trends, to understand the problems, the issues, the red flags, right? Where are we seeing significant problems and the owner need to wake up to them and actually try to fix them? How we should approach different trends that we're seeing in the business. So as a business owner, it's really critical that you have the right information, the right intelligence, right? I'm gonna use here a military expression. A general doesn't go to war with incomplete information. A general doesn't build his military campaign strategy based on just high level information. They need to have detailed intelligence. They need to have very granular type of detail, right? Because by not having certain type of information, they can be outmaneuvered by their opponent. They can be easily defeated because they didn't see certain thing coming from the enemy. And business and running a business is slightly similar to that, right? I would even argue that it's often similar to going to war. You have to build a strategy that allows you to win. You have to build a strategy that allows you to build a business to resemble whatever you have in mind. And if you don't have data, if you don't have the right information, it's impossible to win this kind of battle. It's impossible to predict what's going to happen in the future. That's why accounting is so important. Accounting is critical. And you need to have an accounting system, an information system that gives you information on time, that gives you accurate, okay, accurate information, correct information, right? And that gives you relevant information to the level that allows you to make key decisions. If you're a business owner and all you have is the P&L, you're not prepared to win this battle. You're not, my friend. You need to go a little extra step, right? It doesn't matter if you're running a coffee shop or a steel erector, or if you are running a paving roads company, or you're running a daycare, or you are a consultant. It doesn't matter, my friend. You really need to understand how you make money, where are you generating most of your money from, where are you bleeding money, what area are bringing you profitability, and what areas are costing you money in your business, right? Until you build a system that facilitate this kind of data capture, it's virtually impossible for you to have the type of data you need to start getting intelligence, business intelligence, and therefore make good decision. So, my friends, I'm gonna stop here. I'm gonna stop here. Okay. We've been 20 minutes into this. If you need help, let me say this. If you need help, if you want us to help you, to assist you, do not hesitate. We're here to be a support, to be a resource, to be a team player, a team member for you. We want to help you be successful. We want to help you run profitable, cash flow positive business and build the type of business that whether you want to sell it or not, you're going to have an asset that is valuable something. Okay, that is valuable something, that values something, my friend. Okay, send us an email. My personal email is lcpaulo, lcpaulo at yetuadvisory.com, or you can shoot us a text message. Send us a text message at 773-937-1264. Again, it's been a pleasure being here with you. My name is Lunta Di La Paulo. I'm a managing director of Yetu Accounting and Tax. I was excited to deliver this presentation to you. I hope it was helpful, useful to you. And if you benefited from this somehow, go ahead and share the link with somebody else, another business owner who might benefit from this. It's been a great time. It's been a pleasure spending this time with you. Have a great day, and I'll see you next week.